Hi folks, and welcome back to Meaningful Money. Okay, here I am still in my little field outside St Buryan. Beautiful spring day, not far from where I live here, which is quite handy. Last one from here though, I think I'll move on after that. Going to round off our little mini-series on advanced investing now. As ever though, before I get into that, I must thank my good friends down here in the bottom right-hand corner, 7 Investment Management, who sponsor Meaningful Money and help me to keep going. So thank you very much to them. I'm going to round off this series by talking about foreign exchange, or Forex for short. Okay, this is pretty simple really, you'll be pleased to know after the sort of minefield that was contracts for difference last time. So Forex, all you're basically doing is trading one currency against another. Right? So, before we get into an example, it's worth knowing perhaps that this is the most liquid trading market in the world. So more money changes hands on the Forex market than on any other market in the world. And importantly actually, the UK accounts for well over 1/3 of all Forex trading. To give you an idea of just how much money changes hands, in April last year, the average daily turnover was $3.98 trillion. That's just an unimaginable sum of money changing hands every day. So it's a big deal, okay? And the UK is a big part of it, so something we're doing well. Makes a change, eh? So it's straightforward enough, okay? Let's say you've got £1,000 to invest. Actually, I'll move over here a minute. Let's say you've got £1,000 to invest, and let's say we're going to speculate on the change in value of pound sterling, against the dollar, right? And as at today, £1,000 buys you $1,500, right? I've no idea what the actual exchange rate is, so it's just an example, okay? So you buy $1,500, right? And you hang on as long as it takes, and let's say 6 months down the line, £1,000 at that point buys you $1,750. So you sell your dollars and you've made $250 in profit. Problem is, of course, you've got to convert that back to sterling. Okay, so now you're going against yourself because the price sterling has strengthened against the dollar, and so you're going to get less pounds for your £250. But that's okay though, you've made a profit, and it really is as simple as that. You've bought some dollars, they've gone, I want to say up in value. Strictly speaking, that's not right. Sterling has gone up in value against the dollar, and so you've made a profit. You sell out and you're happy, right? That's all straightforward, and that's what ordinary investors do, pretty much, okay? Now, according to Wikipedia, though, anywhere between 70 and 90% at any one time of the Forex market is speculation. So this is people doing things like contracts for difference that we talked about last time, or short selling, things like that. So betting that currencies might go down against other currencies, things like that. And so the vast majority of Forex trading is done by banks, okay? And this is part of what the financial crisis was all about, because banks take your money on deposit, and yes, they lend some of it out on mortgages or credit cards or to small businesses and stuff, but banks sit on massive coffers of cash, and they use it to trade the Forex market, other markets as well. But the vast majority of trading is done by banks trading against each other, making profits not really for the customer's benefit, but for their own profit. So Forex trading counts for a large part of banks' profits. Anything what else to say? Well, you're betting on the value of a currency, so there's all sorts of factors that can affect that. Obviously political factors, economic factors, whether there's war or famine, things like that. So, but this is essentially, you're just investing in currency rather than shares or property or bonds or gold or whatever. So it's just another kind of investment. And if you're just buying the currency and selling the currency, you'll be okay. You can win or lose, but it's an ordinary investment. It's only when you start getting involved in currency shorts or currency forwards or contracts for difference when your losses can be significant, as can your gains, of course. So that's essentially it. That's the Meaningful Money Guide to Forex. As ever, there's tons more to it than that, but the purpose of this website, remember, is to keep it simple. Vast majority of people who watch this will never get involved in Forex trading, but if you want to, then check out, just type in Forex trading. There's some good websites around. Type that into Google and see what you can find. Leave any questions as ever underneath the video here, either on Facebook or YouTube channel or on the site itself, and that'll do for this time. I'm going to move on now though to what is probably going to be a pretty major topic, and that is long-term care, the financial, emotional, all the consequences if you or one of your loved ones is considering going into long-term care. So we'll deal with that. I'm looking forward to that one. It's one close to my heart. And thanks for watching, and I'll see you next time.